Hello traders, it's Friday, September 15th. This is Alan Hong, market analyst of GKFXPrime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So the first instruments we're referring here is the dollar index in 4-hourly charts. So the US dollar index, which measures the greenbacks rank against a trade weight basket of 6 major currency, it was fell against a basket of major currency on Thursdays, down 0.05% to 92.34, as a surge in the sterling to one-year high, which offsets a duo of economics reports indicating the US economy is poised for strong third quarter economic growth. So the dollar failed to capitalize on better than expected inflation and initial jobless claim data in the wake of a surge in sterling amid the rising expectation that the Bank of England will raise rates sooner than later. So the Labour Department said on Thursday its consumer price index was rose 0.4% last month after edging up 0.1% in July, and the uptick in consumer prices index in August was the largest monthly gain in 7 months and lifted the year-on-year increase in the CPI to 1.9% from 1.7% in July. So in a separate report, the US Department of Labor reported that initial jobless claim was decreased by 14,000 to 284,000 in the week ended September 10th, which was confounding the forecast of a 2,000 increase. Meanwhile, Thursday the strong day for sterling, and it was waged on the dollar sentiment, with the parent GBP/USD jumped to a one-year high of 1.3404 after the Bank of England kept rates unchanged but warned that interest rates were likely to rise in the first time in more than a decade in the coming months in order to curb the fast pace of inflation. As for the commodities markets, the gold price was rose for the first time in 3 days, up $2.61 or 0.2% to traded around $1,330.50 a troy ounce. This was after the dollar came under pressures, but gains were kept as the data showed the pace of US consumer price was hit a 7-month high in August. This was raising the expectations for a various rate hike later this year. So gold price was halt a 3-day losing streak as the dollar is despite the inflation and jobs data topping expectations, pointing to an improving US economy which could influence the Federal Reserve to stick to its plans to hike rates at least once more this year. So some analysts believe, however, the Federal Reserve will tackle its rate hike outlook as inflation will continue to undershot the central bank's expectations, which was boosting the demand for gold. So according to the share markets analyst at Ava Trades, Adrian Murphy said, the Federal Reserve are notoriously optimistic with its inflation expectations, so investors could be surprised with how slow the body actually raised the cost of borrowing, which is good news for gold. So gold price is actually sensitive to move in US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. While the oil price was settled at 7-week highs on Thursday, it rose 59 cents to settle at around $49.89 a barrel. It was buoyed by a pair of reports earlier in the week suggesting that rising global oil demand could stem the glut in crude supplies. So the crude oil price started the sessions on the front foot, surging about $50 a barrel for the first time in 5 weeks. So as investors continue to cheer an International Energy Agency reports, the IEA report released Wednesday's estimating the global oil demand this year will climb by the most since 2015. So the IEA revised upwards its estimate for demand growth in 2017 by 100,000 barrels a day to 1.6 million barrels a day, or 1.7%. So the bullish outlook for oil demand was lifted the expectation that the demand and the supply imbalance in oil markets will continue to narrow in the coming months. The IEA reports came a day after OPEC says production in August was fell by 79,000 barrels a day to 32.76 million as falling production from Venezuela, Iraq, and the UAE and Saudi Arabia which was offset the rising output from Nigeria. So the fall in OPEC output came as a relief to investors, many of whom had questioned the oil cartel's commitment to tackle excess supplies following a drop in the rate of compliance with the global accord to curb productions. According to a Forex.com analyst, Fawad Razakzada said, stronger demand and supply restrictions from OPEC and Russia are the main reason for the oil price upsurge. So now we're going to review the highlighted economic data and events on Thursday, as well as the focus data and event for today. So yesterday, Thursday, Australia was released its employment reports as employment changed for August with 54.2 thousand, which is better than the expectations of economists at 15,000. So besides of Australia, China has released its industrial productions for August as well. So it was at a 6% growth, which is slightly disappointed compared to the forecast of economists. So during the European trading hours, the Switzerland Central Bank as well as the Bank of England was decide its interest rates, the benchmark interest rates, on yesterday. Right, so both of the interest rate decisions was at the same as previous, okay, is negative 0.75% for the Switzerland's interest rates, as well as the 0.25% for the Bank of England's interest rates. Alright, so during the North American trading hours, the United States has released the core consumer price index, also referenced as the inflations, okay, so it was at 0.2% growth, okay, which just met the expectations of economists. So the initial jobless claims report show the result of 284,000, right? So which is lower than the expectations. So this is considered a positive result for the employment markets in the United States, right? So for today, we only got a series of the economic report from the United States, okay, which will be releasing tonight during the North American trading hours. So the data will be including the core retail sales and adults inflation reports, okay, and as well as the retail sales, alright, and also the Michigan consumer sentiment for September. So the last data tonight is the US Baker Hughes oil rig count, alright, which will be indicating the supply levels of the crude oil in the United States. And it's a technical analysis session. So first instruments, we're referring to the Great British Pounds against the US dollar pair in 4-hourly chart. So the pair GBP USD remained traded in an uptrend structures, and it was gained back momentum since the price closed above the previous high at 1.333, and currently it was hovering below the resistance level at 1.341. So the both moving average lines remain expanding upwards, and this was supporting the current uptrend structures. Additional with the bullish signal showing the MACD indicator. So closing above 1.341 will be a signal for continuation of uptrend and probably to move further higher towards the next resistance level at 1.35. The single currency remained traded in a downtrend structure against the US dollar following the failure to close below the Fibonacci retracement level of 50 or the price at 1.186. But however, currently it is still traded below the both moving average lines, indicating the short-term weakness. So referring to the MACD indicator, the both movement lines started narrowing with weak momentum, suggesting to be traded ranging in short-term between 1.186 and 1.197. So closure below 1.186 will be a signal for shifting trend directions become downtrends and probably to drop further towards the next support level at 1.182. Well, the Kiwi remained traded in a downtrend against the US dollar, so it was fell out from the lowest level of recent trading range. It's a signal to drop further in short terms. So closing below the previous low oil price at 0.713 will suggesting for continuation of downtrend and probably to drop further towards the next support level at 0.708. Aussie still remain in an uptrend structure, but it is traded with light volumes. So currently it is traded below the both moving average line following a retracement from recent high at 0.812. So it is a signal to be weaker in short terms. So referring to the MACD indicator, the both movement lines started narrowing with weak momentum, suggesting to be traded ranging between 0.795 and 0.806 for short terms. So daily closure above the previous high or the price at 0.807 will be a signal for continuation of uptrend and probably to move further higher towards the next resistance level at 0.828 as long-term target. Looking into safe haven Japanese yen, it is remained traded in a downtrend against the US dollars, and it was surged out from the highest level of the recent downward channel but failed to close above the resistance level of 110.9. But however, currently it is traded above the both moving average line, suggesting to be further stronger in short terms. So a closure above the Fibonacci retracement level of 50 or the price at 110.9 will be a signal for shifting trend direction to become uptrends and probably to move further higher towards the next resistance level at 111.7. As for the commodities markets, the gold price remained traded in an uptrend structure and it was failed to fall below the Fibonacci retracement level of 23.6 or the price at $1,321. So this was suggesting to be traded ranging between $1,321 and $1,357 for short terms. So closing above the previous high or the price at $1,357 will be a signal for continuation of uptrends and probably to go further higher towards the next resistance level at $1,375. As for the oil price, it is continue its uptrends with a closure above the previous high at $49.30 a barrel, but however it was retraced from the recent high at $50.40 and formed a long head candlestick pattern in 4-hourly charts. So this was suggesting to be weaker in short terms, so closing below $49.30 will be a signal to experience a short-term retracement and probably to fall further towards the next support level at $48.60 a barrel. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.